Hi, Sean from Mel's YouTube book site YouTube channel. Okay, today we're going to be talking about the trial balance. All right, so let's get started. Okay, watch my mouse. What is a general ledger? A general ledger is where all financial transactions of a business records are kept that affect a related group of item entries entered throughout the months and the year. For example, inventory, stock, purchases, sales, suppliers, also known as accounts payable, customers, also known as accounts receivable, cash book, petty cash, assets such as computers and cash registers, etc., VAT or GST, and journals. All right, so the trial balance is divided into two sections: income, expenses, and retained income, profit and loss accounts. The first section, number one, of the trial balance is where the income and expense accounts has every account itemized, whether it be an expense or an income total at the end of the month, and the profit and loss is transferred into the second section. Okay, the second section, which is assets, drawings, liabilities, equities, and revenue. The second section of the trial balance is where the information is gathered to create a balance sheet. For example, assets, drawings, liabilities, equity, and revenue. Okay, here, you itemize all the total expenses and income for the month on the debit side and all the income on the credit side. You then subtract the smaller total from the larger total, and the balance gives you an idea of whether your business has done well or not in the month of March and shows a profit or a loss. The profit or loss is then transferred into the retained income section on the credit sides, or if a loss on the debit side of the trial balance. All right. So these are March control accounts that we carried forward. The sales control account, purchases control account, suppliers control account, rent deposit brought forward, cash book brought forward, petty cash brought forward, and of course VAT. So these are all the accounts we brought forward. All right, so let's start with the March's trial balance sheet. Financial, income, and running expense account section, which is the first section. Remember, we discussed what the first section is. The sales control account on the credit side, you've got $2,575. The interest earned is $20. And then these are all the expenses, like the wages and casual wages, purchases, rent, print and stationery, petrol, cell phone, depreciation. You notice we're putting all the amounts on the debit side. Electricity and water, salaries, pay as you earn in UIF, medical aid, pension fund, bank charges, refreshments, and cleaning. All of these amounts go on the debit side. Then we add up the credit side and we get the amount over there, and we add up the debit side and it comes to $1,949.07. And the credit side is at $2,000, $2,500. Okay, so then what we do is we take the larger amount and we minus the smaller amount. So that gives us our net profit. That's the profit and loss retained income. So the net profit is $645.93. So what we've done is we've taken this $2,595 and we've subtracted the 1949 and 7 cents dollars. And that's how we get our net profit. If this side was smaller than that side, it would have been a loss because it would have been on the credit side. So this has to balance. That's why we work out what the net profit is. Okay, so the balance is $2,595. Now, the second section continued of the trial balance. We take this net profit and we bring it down into the second section on the credit side. Okay, because that is a net profit. So it explains it here very clearly. Retained income net profit brought down. And there's the stars. $645.93 on the credit side. Long-term liabilities, the capital, that's the money the owner put into the business, $15,000 on the credit side. Assets, okay, $78.26 on the debit side. Asset depreciation of $1.30 on the credit side. Current assets, the ABSA Bank cash book, $14,605.75 on the debit side. The inventory control account of that amount, the customer control account of $805, and the rent deposit, all under the current assets. Current liabilities, petty cash, $9.50 on the debit side. Suppliers control account, $862.50 on the credit side. And lastly, the VAT, $13.78 on the credit side. Then we add up this entire total here. We get an amount there, and we add up that total. This must balance. Very important. If it doesn't balance, there's a problem. You need to go find somewhere you've put in the wrong figure, or you've put in the wrong amount. Okay, so the amount comes to $16,523.51. There we done. That's the trial balance explained in a nutshell. Okay, so you got to understand that accountancy is a very pedantic procedural science. So you have to it works with figures and amounts. So you've got to actually be 100% correct on everything that you do. And that's why we explain it as much as we can. If you go to our bookkeeping course, which teaches you bookkeeping right from the beginning, you get a better idea of this. These are just little snapshots that we do in the one-on-one playlist, where we're just giving snapshots of the various accounts. But please go and look at our sorry about that, bookkeeping course. All right, it's about 9 lessons. Very important. All right, so please like this video, share it with everybody you know, and subscribe to our channel. We're always adding more and more to this channel, and we're growing this site. So, we if you have any questions or comments, please leave them, because if you don't get questions from me, we don't know if you understand it. So I hope I've done the best I can to explain this in a nutshell. But please, if you didn't understand anything, please contact us. Leave a comment or question. All right, so please subscribe, and and comments and questions. So that's Sean from Mel's YouTube Bookside YouTube channel. Until our next one-on-one video, good day on you.